Well, I think there's a little bit of the air coming out of the balloon because the cuts are only so deep. Going to zero was the narrative in July, Becky. Zero from 2.5 million barrels per day of crude and condensate exports trailing 12 months through June. That would have been a huge shock to the market. It looks like it's been cut about in half from that baseline. So there's two things that can happen when they release the names of the 8 countries that have been given exceptions. One is that some countries that negotiated essentially saying, OK, we're going to cut more in the future if you give us this exception. Countries probably like India. That could tighten the market a little bit more. But some of the others may have gone to zero to negotiate, could pop back up. Countries like Korea. That could even add a little bit more to the market in the way of supply.
So what would you do at this point? Would you be a buyer of oil prices here?
No, not going into first quarter. First quarter cyclically weak, typically. And in this case, if you have today's levels of volumes coming out of Iran, you could be looking at supply ahead of demand by 1 million barrels per day going into 1Q19.
Will that be good news for people at the pump? Are we going to see lower prices, or will it take a while for that to trickle down?
Well, up like a rocket, down like a feather is typically the way it works with gasoline. But yeah, there's definitely some pass through to drivers. On the demand side, one of the realities of the crude price going up so much and the dollar strengthening at the same time is that you've also had effectively a currency-adjusted acquisition cost ahead of the actual percentage gains in crude. For countries like India and China, that also means weaker demand going into the end of the year, early first quarter.